There's a couple interesting economic data points that have come out this week or are going to come out. One is we've gotten new data on credit card default rates, which are spiking very dramatically. Over 10% of credit card balances are now 90-day plus delinquent. That tells you the strain that the American public is under and that has been caused by inflation. And it's sad to see people that are being that economically harmed. Well, we're going to get a new inflation number, CPI or Consumer Price Index, on Wednesday. Now, the rate of inflation has been coming down, so the increase in prices is getting less and less. But that's not changing all the price increases that have happened over the last 3 years under the Biden-Harris administration. What I'm going to be looking for with CPI is what's happening with the biggest component, that's housing, and they have a flawed way of looking at it called owner's equivalent rent, OER, and there's a lag impact on that. And they changed that in the 80s. And by the way, if we were still calculating inflation like we did in the 1980s, early 80s, or late 70s, our inflation numbers would be almost double what they have been reporting over the last 3 years. So I'm going to be very interested in taking a look at what's going on with the housing data, obviously energy costs, and the other big one are, core goods like food prices. But, there's been some other real drivers of CPI. Look at your auto insurance rates. They have spiked tremendously, and homeowner insurance rates. So I'm interested in the data. If the CPI number comes in a little lighter than expected, then it's going to be clear that the Fed will start cutting rates in September and probably continue to cut, even though they tend not like to do that in the middle of a presidential election. I think they will be, and they've already signaled that. Now the question, will they cut by 25 basis points or by 50 basis points? If the CPI comes in a little hotter, I think they'll still probably cut, but probably by only 25 basis points. So we've had some bad consumer credit data that's telling you that this economy is already maybe has entered recession or slipping into recession. And we're going to have some important inflation data to see how much the rate of inflation is slowing down. Again, important. That doesn't mean prices are coming down. It's just the rate of which prices are going up. So keep your eyes watched, and the financial markets will be moving all over the place watching this data. Take care.